Uh, Greetings to everyone. We are Group 4. We'll be presenting on the topic real estate environment in the Greater Vancouver area. In this presentation, we'll go in details about how the market is in British Columbia as well as in Greater Vancouver area and what all the factors that affects it. A recent forecast by the British Columbia Real Estate has predicted that there will be a 3% rise in the housing cost and also an increase in the sales of by 8% by the year 2024. And the Canadian real estate market is expected to have a 10% compound annual growth rate through the year 2024 to 2029. And the Greater Vancouver area is expected to grow 3.2% in the same timeline. The micro factors that are affecting the Greater Vancouver area is growing GDP and inflation, economic risk and geopolitical conflicts, and conflicts across borders and oil prices. Uh, Growing GDP can uh, hinder the support the buying prices of the individuals who are or the home buyers. If there is a higher GDP, there will be more confident home buyers, and vice versa. If there is less GDP, it also affects the housing market in a negative term. Next is the economic risk. The economic condition of the nation is supposed expected to be positive, then there will be a positive impact in the real estate market too. And if it is expected to be negative, there will be a negative impact on the real estate market. And the conflict across borders and oil prices is also increase the chances of disruption in the supply chain management and also increase the construction prices and expenses. Next is how employment, population growth, and economic stability affects the real estate market in the Greater Vancouver area. Employment rate supports the a good employment rate increases the chances of more houses being sold in the market. And if there is a low employment rate, it also hinders the real estate market. And young generation's preference is also something that affects it. Uh, Young generation usually prefers moving into spaces like skyscrapers and micro unit rather than individual houses. Next is the economic stability. There has to be a strong economic in order to have a positive real estate market in the Greater Vancouver area. Next slide will be explained by Nikesh.
Yeah, so let's talk about the 5-year historical performance of the property market that we saw in Vancouver. So 2019, the home sales, if we look at 2018, it rose up substantially up to 44.9%. And then the sellers began to get some ground, and then particularly especially in townhouse and apartment markets. So going on to 2020, the competition among home purchasers actually resulted in a 73% increase in sales compared to 2019. So the market this time leaned heavily toward these sellers, especially in the condo segment. 2021, home sales, they still are climbing, but this time at a slower rate, only increasing around 13.5% over last year. So the sellers' market conditions remain still quite with a strong demand. 2022, so this year, after 4 years, sales activity fell 8.1%, but still we're above average levels. Despite a small increase in those new listings, the supply was still limited. 2023 sales climbed up by 47% from last year, and this indicated a shift in the marketplace after so many years. So sellers became increasingly hesitant, resulting in large inventory. So the price actually stabilized. Now, next slide, we actually are going to talk about value analysis. So the potential benefits that we mostly see is, the region has experienced consistent property appreciation with forecast indicating long-term capital growth despite the recent things that are happening in Vancouver. The demand for rental properties actually remains high due to the population growth and job opportunities. This also provides the investors with reliable income streams. So there are technological advancements, and these kind of stuff enhance market accessibility. So the next slide, we're going to talk about the costs that are actually related. So property acquisition costs, first one, how much is it? So down payment, we're looking at around 5 to 20% of property price. Closing cost, around 2 to 4% of the purchase price. Legal and appraisal fees. So the legal fees stands around, 1,000 to around $3,000, again, depending on the property complexity. Appraisal fee stands around $300 to $500. Mortgage related costs, we're looking at around, mortgage insurance for down payments below 20% is like between 3 to 4%. Ongoing expenses, let's say, you get a property, there's maintenance, utilities, property taxes, homeowners insurance, this all combined will be around 14% in itself. Additional costs, we're looking at home inspections, straight fees, mortgage interest, property management. So all of this combined, we're looking at again around 14 to 17%. So understanding these are like important because these are especially crucial for investors who want to make like a long-term decision. Next, we're going to talk about anticipated changes in local economy. Government policies, nowadays they're affecting housing supply. In the coming 5 years, we expect to see an increase in the construction of units, especially in regions where single family homes were predominant before. So the increase in supply could potentially ease the price challenges that we're facing in Vancouver. Macroeconomic influence and trends. So the direction interest rates take in the 5 years will play like a long role in shaping the real estate landscape. So key economy indicators like inflation, employment rates, and GDP growth will all influence the consumer sentiment. Post-pandemic housing trends after COVID-19, it has led a lasting change in housing preferences and lifestyle choices. So remote work became more common, and then interest in suburban living. People liked outdoor amenities, so this actually pulled a large shift. Housing market supply and demand. So efforts to accelerate construction programs have been created now, and then these housing numbers are actually expected to increase over the next 5 years, which is again going to ease the supply constraints and meeting needs. Economic growth and industry tenure. So again, economic growth, we're looking at factors such as international migration, demographic changes. They all affect the level of housing demand, which will affect the types and the price movements. So let's look at the risks. So what are the risks that we found while doing the study? So market volatility, economic factors. You can see fluctuating interest rate might these might influence the demand of the buyers. Regulatory changes like shifts in government adopted policies. Interest rate risk. There are mortgage rate shifts which can affect the mortgage payments. Tenant risk. Tenants keep on moving around. There's a huge turnover for tenants. Maintenance cost. If there's unknown cost of repairs and additional repayment to the existing maintenance, that's a large cost in itself. Liquidity risk, duration of the real estate sales does matter a lot. So, especially in times of economic recession. Next, we're gonna talk about mortgage strategy.
Okay. In mortgage strategy overview, the investors in Greater Bangalore face a choice between fixed and variable mortgage rates. In March 7, 2024, the fixed rate is 5.14% and variable rate is 6.65%. The key considerations include aligning choices with investment goals and risk tolerance. Opting for fixed rates offers stability, protection against future rate increase, and suits long-term planning. Variable rates with the potential savings appeal to profit oriented investors and provide flexibility for shorter terms. Next slide, please. The suggested strategy emphasizes a personalized approach based on economic monitoring, aligning with the investment horizons and accessing risk tolerance. Investors are argued to conduct it through analysis of economic condition and personal preferences for informed decisions in the dynamic Greater Bangalore real estate market. Next slide, please. The Greater Vancouver area's best 5-year fixed rate mortgage, averaging 5.1%, appeals to stability seeking investors. The structured option minimizes the impact of variable rates, offers a steady, predefined rate for the long duration. Ideal for the risk averse, it ensures predictable cash flow and shields against future rate hikes. Suited for long-term planning, the fixed rate mortgage aligns with objectives of stability and secure financial environment, making it advantage for prospective investors in the evolving Metro Vancouver real estate market. Next slide. For conclusion, I call my friend Nikesh.
Yeah, so based on the case study that we worked on, we numbered out few conclusions. Obviously, the macroeconomic factors like inflation, economic uncertainties, they impact the market dynamics of the whole property market. Investors, they need to do a thorough research before involving. and cost considerations and do the whole risk assessment before actually looking for long-term investment. They also have to, if they're looking for long-term buying, they have to offer fixed rate mortgages which ensure stability, and that is also ideal for investors. So again, projections that suggest, let's say, growth potential fueled by the government policies, and also interest rates that are favorable towards both the investors and home buyers and sellers, could actually be helpful for balancing out the whole stability of the country. That's it for our presentation. Thank you for joining.
How much time we took?